I'm Andrew Henderson from Nomad Capitalist, and today we're going to do something a little bit different. We're going to do a deep dive into the world of cryptocurrency. This is something that a lot of people I know here are already participating in, whether it's through mining, whether it's through buying, trading, holding. And I also know a lot of other folks are interested, increasingly so, especially with what's happening with the coronavirus and the economic fallout and all the crazy stuff right now in the world, in putting crypto into their portfolio, but they're not sure where to start. And so I've invited Heidi from Crypto Tips and learningcrypto.com to come and join us. Heidi, welcome.
Hey, thanks, Andrew. It's great to be here.
So you and I first talked a number of months ago. You're a popular YouTuber and you're big on Twitter and just a big voice in this space. And wanted you to walk us through really just start from the beginning, because I think, my friend Nathan Rose wrote a book called The Crypto Intro a while back, and his philosophy was, people feel like if they don't know a lot of the basics by now, that it's too late for them. I think you would challenge that notion and say it's never too late to get started.
Absolutely. And digging into kind of the history of Bitcoin and this evolution of the cryptocurrency space is something that's incredibly interesting to me. And I found that people are interested in learning about the history of it because, most likely they, unfortunately, they maybe chose to invest in crypto because they heard about it on the mainstream media, or they heard it was going crazy up in price. So they just bought some, not really knowing anything about it. So it's actually really what I love to focus on my own channel, kind of explaining the philosophy behind crypto, why it exists, and, all in an effort to help you better understand what it is you're investing in and to make ultimately wiser investment choices and maybe hold that investment a little bit longer, knowing the real weight of what it is that you've invested in. Yeah.
So the question, and I know how you'll answer, is cryptocurrency a good investment? Yes. From your perspective, why? And specifically speaking to the kind of person that we're talking to who wants to be international, who believes in diversification, who believes that there's not just one number one country, why is it a good investment?
Sure. Well, first of all, you'd have to understand, why are you investing? Probably because you think it's going to be profitable. And what would make cryptocurrencies profitable? Either, I know we are in a highly speculative time frame right now. It's still a very new market. But over time, I think usability will prove itself, either as a store of value or as a transmission of value. So why would that happen? Because maybe people are losing faith in their fiat currencies, or maybe because certain cryptocurrencies allow you to have peer-to-peer transactions and are borderless, which I believe matches up perfectly with people who are trying to live internationally, maybe have multiple passports. How great is it that you wouldn't have to worry about, transferring from one fiat currency to another? You can transact in one cryptocurrency across different borders. Furthermore, as governments are, kind of clamping down, we're kind of seeing it now with the coronavirus and quarantines and governments trying to control what's happening, especially as their economies start to get hit with this lack of trade and global trade. Having a tool that allows you to trade peer-to-peer, borderless, censorship resistant is come on, the value is very apparent when you're considering those. There's this saying of, the historical data certainly is no absolute prediction of what's going to happen in the future, but the fact remains that Bitcoin is the most profitable investment this past decade. That certainly speaks to it being a brand new investment and kind of seeing price discovery and seeing it grow exponentially like that, but it's still very young. And so I think there's a lot more to go for Bitcoin, certainly.
We talk a lot about offshore banking because we largely talk to entrepreneurs and investors who need things like brokerage accounts and bank accounts to facilitate that. And I don't, maybe we disagree on this, maybe we don't. You're free to talk about this. I do think that having cash, having a bank account or bank accounts, serves some purpose. But one thing that we don't talk about as much is what you're saying, which is you've got a war on cash happening in much of the Western world. That's not entirely true in parts of the Middle East or parts of Asia, and people should know that. But you do have a war on cash in a lot of the West. And so I've said precious metals, and I think also crypto could fall into this, are a great place to, keep money outside of the banking system where they're not worried about every dollar that's coming into your coffers. You get money from someone they don't understand. I've had that before where, you try and deal with a guy who lives in Ukraine and your bank freaks out. Why are you receiving money from a guy in Ukraine?
So yes, I agree that holding cash is a wise decision. It's all about hedging your investments. And the truth of the matter is that although crypto is very promising and it could be very useful, right now, not a lot of people trust it, certainly not big institutions. We're still seeing that kind of slowly evolve. So people who are deep in the crypto space are kind of straddling like this utopia of the world could be a such better place if everyone just used crypto, versus like what the other side is now, where we still have to live in this world where cash is still, massively used for investments. And so I think it's wise. I mean, and, reality check that having cash on hand could be good, especially with what's happening with the economy, to take positions in like real estate or precious metals, what have you. Yeah. And I mean, I think gold and silver are good to have as a hedge. Silver might do better, but I mean, I'm not this like crypto bull to the point where I get blindsided. And I think it's good to have a good perspective and a good kind of foothold in reality, and how you have to participate to.
Do you think that's part of why? I mean, I feel like some people, they come into these and this happens with so many new spaces where there's a devoted following. And listen, we've worked with some of those folks. I mean, we've had people where, we had to start asking our clients about bank balances. And it started with people in crypto where you'd have a guy who had $40 million in crypto and you'd be like, oh, no problem. He can show, $25,000 in the bank to do that residence program. And then we'd be like, all right, here we go, this or that. And he'd be like, I have $11 to my name in the bank, right? So we've had that. I'm agnostic to it. If that's what you want to do, that's what you want to do. But maybe speak to the fact that, to me, the utopia seekers, I feel at times repel the masses that you need to get penetration on a wider level.
Oh, sure. If you're trying to, get mass adoption, unfortunately, you have to kind of water it down, because otherwise it is such a conflicting way of life, kind of compared to what everyone has been, raised with or accustomed to. So not everyone is so open-minded or curious, really. So if, I think it is unfortunate that some people do come off as kind of not like extremists, but just out of step with reality. And the more you kind of push that narrative on people, I think you're just kind of doing a disservice to the space. So I think, having a well-rounded perspective and understanding the realities of dealing with governments, you're going to have some, work with the tools that they like to work with, unfortunately. But who knows what's going to happen in the future. I think there's a lot to be said of how the market shapes how things form. Like what I talk about a lot is like Zimbabwe and what happened with them and hyperinflation when their currency was really going crazy. People were desperate for some sort of stability. So they were using US dollars on the black market. It was illegal, but they were using it because it was working for them. It got to the point where even the government officials were using US dollars, and then they, that kind of shaped how, they then pegged or matched with the US dollar. So don't doubt what the people want, how that can change government practices. But the fact of the matter is it's still brand new. Times like these with this, I think we're going to see some crazy things in the global economy happen. And I think people are going to be much more open to the different options out there. And that's why Bitcoin was created in the first place, by the way, was the very first transaction that Satoshi sent included a hash of one of like a UK newspaper article saying banks get bailed out again. So that was, I think, a very clear message of really his motivation for creating Bitcoin, a way for people to opt out of that system if they wanted to. And that's the beautiful thing. It's like, it's all a free, voluntary system. You don't have to use Bitcoin. You don't have to, and you can, just like, I don't know, governments kind of make you use their fiat currencies, but it goes the other way around also. You can use it, but you don't have to. So
I'm gonna ask you one more question, then get into the how-to for folks who may be looking how to do this. Is this speculative? Is this an investment? Is this a hedge?
I think it's kind of 3 in 1. It's certainly speculative just because it is still so new, and we're not really seeing the full potential of the utility of these cryptocurrencies. That infrastructure is still being built, helping merchants, have platforms that allow them to accept it. Credit cards, allowing people an easier way to spend their cryptocurrencies in a way that hopefully doesn't sacrifice their privacy too much. So in that way, it is still very speculative. You're investing now, hoping that, in the future, it will just continue to become more solid, which we've seen the past 10 years. That's true. That's proven true so far. A hedge, you're hedging against, ultimately, whether you know it or not, you're kind of hedging against your own governmental fiat currency, because Bitcoin is not owned by any government. It's not controlled by any one entity. It's a beautiful decentralized network that is voluntary and permissionless. Anyone can take part of that. So, you're participating in that kind of philosophical investment, whether you're really into that or not. That's the fact of the matter. And a good investment, like I said, it's proven to be the most profitable investment in the past decade. So I think that's a pretty good track record so far.
To your earlier point, I think it's really interesting, and here's what I see. I work with a lot of folks from the West. We've started opening up to folks who aren't in the West. I've got a lot of friends, I live in places that are off the beaten track, the Montenegros, Serbias, Georgias, Malaysias. I mean, some of these places where I'm spending time, and I know people have seen adversity in a way that the West has not. And to me, whether it's crypto, whether it's second passport, whether it's whatever other diversification strategy that lends itself towards people saying, I want an escape hatch, I want options. And I feel like, if you're in the crypto space, you should be looking at some of this other stuff. I know you left the United States, you moved out, you moved to a place where you were, as we say, you went where you were treated best, go where you're treated best. And I mean, to me, these things go together, I think. I mean, if you expect that the government is going to screw things up, which they have a long history of doing, you're taking defensive positions.
Yeah.
Is that
absolutely? Yeah, absolutely. You're you can hedge your life in many different aspects. You can hedge your health by adopting a healthy lifestyle, a healthy diet, exercise. You can hedge your your wealth or your investments by investing in a system that could very well replace what we've been used to for so long. And I think it goes hand in hand with your passports and where you live, because unfortunately currencies are directly tied to where you live. And something my husband and I talk about all the time when we travel is like, how annoying is it we have to have this little book and someone has to put a little stamp on it just so we can go from here like 10 feet and we're seeing birds just fly around. They don't need a passport, they can go wherever they want. So it's just kind of silly to think people trying to put their power over travel. And the best way you can do that is, you have to work with the system, and there's ways for you to kind of get some wiggle room. And absolutely, just like with cryptocurrencies, a voluntary system, there are governments that allow you to, become citizens or residents and pursue your best life to the best of your ability.
And I think that's the framework that we're starting this with is, as much as, and I think, I don't know about you, I mean, I've spent some time, maybe not a long time ago, doing the utopian kind of navel gazing thing. And at a certain point, I'm more successful, I'm happier, I'm more fulfilled just saying, all right, here's what it is. We can make certain changes. We can go where we're treated best. We can use cryptocurrency. We can opt out to a certain extent. But I think the thing that, if you're in the United States, if you're in Australia, if you're in the UK or whatever these countries are less friendly to things like freedom, They want to be more authoritarian. They want to have higher taxes. They want to restrict things like crypto. There's always, as I said, there's always going to be a place with opportunities. There's always going to be some country saying we need bodies and we need capital. So that's the perspective I think we're coming from. With that, how do you get started? How do you invest in crypto? If someone's brand new to this, where do you suggest they start? What should they do?
Sure. Well, there's always a conflict here with ease of use and security, or like best practices, or what aligns most with like the philosophy of how crypto should be used. So the fact of the matter is, I started off using a centralized exchange to invest in crypto, and that's probably how like 99% of the people entering this space are going to be investing their very first cryptocurrencies. So centralized exchanges are exchanges that are custodians of your coins. It's pretty easy, really. They are centralized, and so in that way, they can take on the responsibility of the custodianship. And so it's pretty easy. You just need, well, okay. Here. First of all, if you're a U.S. citizen, and you're going to use a centralized exchange,
it wouldn't be one of our videos if we didn't have this caveat. You know?
Yeah. Just so you know, you will be required to go through more extensive KYC questions and requirements than maybe another citizen of a different country. Things that you should expect to give away are your address, your occupation, your net worth, why you're investing in cryptocurrencies. And unfortunately, it's becoming even more common for these centralized exchanges to be demanding that you fork over your social security number. So I mean, for me, that just screams, don't do it. But I mean, it is what it is at this point. There are decentralized options. They are more advanced and can be very overwhelming and not as user-friendly. But anyway, if you're okay with that, you can go through that process, and it's pretty easy. You can link your bank account, fund your account on the cryptocurrency exchange, and trade into Bitcoin, Ethereum, or, you know, depending on how many coins.
Exchanges. I mean, like Coinbase and.
Oh yeah, Coinbase is, it's a good exchange, highly reputable. It's available in many different countries. They have partnered with some like blockchain tracker kind of companies to try and see what you're doing with your cryptocurrency. That's kind of, you know, behind closed doors. But one exchange that also that I don't mind recommending as a centralized exchange is Kraken. Their reason being, they have very kind of transparent security practices, so you know what they're doing to secure your crypto. They handle that KYC information in-house. A lot of centralized exchanges are outsourcing that, and you don't even know it. You're giving it to some random third party, and they're securing your information. Also with Kraken, they have relatively low fees for depositing, withdrawing, and trading. And they have a pretty responsive help desk if you get confused. So I'm okay with recommending Kraken. Any kind of long-standing exchange, pretty much the longer it's been around, the more it's been proven to be secure. Some centralized exchanges do have like an insurance fund, because they are the custodian of all of these coins that people are depositing onto their exchange. They can kind of be a honeypot for hackers, and it's like guaranteed to happen. So some of them do have an insurance fund to help with theft if it happens from like their end, from their lax security practices. But if your specific account gets hacked because you clicked on a phishing link, or you have a super easy password to guess or something, you're on your own. So for any exchange, they're only going to cover, their own liability, not yours. So.
Is that where people should get started? I mean, because I know that a lot of people that we work with who do crypto say, I like to keep it offline.
Oh, absolutely. Yeah. I mean, that's just like gaining your position in crypto to purchase it. I highly recommend, as you know, before you even buy any crypto that you will deem valuable, learn how to store it offline. I have, not to plug my own video or channel here too much, but I have many videos that go over, good storage options. And I actually just did a class on everything to do with wallets on my Patreon account. But yeah, absolutely. Storing your coins offline is like the epitome of why you should be investing in cryptocurrencies. It gives you full control and custodianship of your investment. It's not being stored in some bank or some third party that you have to trust. The responsibility is on your shoulders, but that's a whole lot of empowerment as well.
And so, I mean, how do you see people generally, storing that? I mean, you're literally putting it in a safe somewhere. People are storing it off site. I mean, distributing it. I mean, you could make it an internationalized kind of thing. I mean, what's your recommendation if you're going to go offline?
Well, what you're doing is you're storing the private keys of your wallet, which is essentially how you withdraw your coins. You're not taking the coins off of the blockchain. It's just the access to those coins. There's a number of ways to do this. You can create things like paper wallets. Hardware wallets are a really happy medium for like usability and security. They make it really easy for you to make transfers in and out of the wallet, as well as your ability to, once you unplug that USB device from your computer, no hacker can get into it unless they physically have your device. And if they have the accompanying information that they would need to access the information on your device. So that like people are, they have these devices called like crypto steel is one where it's like a galvanized steel and it's engraved and you can, they're like little tablets and you put them in order of your private key and you can lock that up and it's like fireproof, rust proof. And it's, I mean, when you're talking about securing something that you think will be immensely valuable in the very long term, yeah, you got to think about long-term storage. I wouldn't recommend storing like your hardware wallets or your private keys in something like bank vault or anything like that, because then again, you're relying on that bank existing and all that stuff. So there are ways that you can decentralize your storage of one particular wallet. You can bury it in the ground. You can store it in places that it's like you have to get kind of really like a prepper mindset almost.
A lot of folks, we work with a lot of folks, they use the hardware wallet approach, and I'm thinking to myself, right, you don't want to put it in a bank because, I mean, same thing with precious metals. I mean, number one, in some cases, there's a reporting requirement for what's there. But yeah, I mean, the bank, you have a bank holiday, now you can't get to it. Who knows what they do? You don't pay the bill, they auction it off. But I imagine maybe you buy some land in another country and like bury it in a vat or something. But yeah.
There's the company name escapes me, but there are like some extreme wallet options of these companies that generate the private key. I mean, that's kind of also a third party again, but they'll like generate the private key for you, guaranteed it's offline, and they store it in this like super secure vault, and it's like guarded by a guard and all that. Like that's kind of intense. But I would advise, like, if you're really, nervous about storing all of this investment into one wallet, don't be shy to diversify your wallets as well. Like maybe have multiple ones. So like if something happens with one, you still have most of them. If you have your private keys, you will always be able to access your crypto. So that is like the end all be all security practice of storing your cryptocurrencies offline, is maintaining your private keys in a way that, they don't get lost, stolen, damaged. So yeah.
So if someone's getting into this, maybe they're already on Coinbase or one of these exchanges, you would suggest start migrating over to the hardware wallet or paper wallet system, at least substantially.
Absolutely. Yeah. I mean, I would suggest paper wallets for any crypto that you're not going to touch for like years, just because it can be a hassle of accessing those cryptos. Once you access cryptos from a paper wallet, you should just assume that paper wallet has been compromised, because you are essentially putting those private keys online. So you kind of have, if you want to just do a little bit, you have to make another wallet and put it there. So that's why hardware wallets are kind of easy medium, but at the same time, like there's nothing perfect. This is still a developing technology. And even though, like, say Ledger wallets, that's the very popular one, that's been around since like 2014 or 2013, I think. There's still some hiccups where, like, sometimes the device doesn't work right because you are working with a physical, electronic device that could break. And that, even though you have your private keys, you don't want to have that kind of moment where, like, oh no, things aren't working perfectly. What do I do? it's easy to get some anxiety there, but just I would definitely prioritize getting your coins off of the exchange. It shouldn't take you that long to kind of comprehend how to store your cryptocurrencies, especially with this quarantine time. Everyone's got time in their hands to learn something. I think that's certainly something worth investigating.
Buying, trading, mining. Know folks who do all three. I mean, how do you categorize where someone should start? Which one is right for you? I mean, obviously, you can mine and hold. You can mine and. I mean, how do you go about figuring out a strategy?
Well, I think mining certainly used to be way more profitable, way more easy to mine Bitcoin. You used to be able to do it on your laptop. Now you're competing with these huge mining farms that have super efficient, specifically designed computer chips to mine Bitcoin. So that's what you're up against. And so pretty much it's impossible to get any block rewards, because what you're doing is you're competing with their computers to solve the algorithms the fastest. And whoever does it first gets the block rewards, which the halving is happening in just about a month, where the block rewards will be cut in half. Anyway, but so maybe if you also, mining is a great way to earn crypto without going through that KYC process on an exchange. You don't have to mine Bitcoin. There are plenty of other coins that are mineable that you can acquire and then trade into Bitcoin if that's what you want. Also, depending on where you are, I believe your profits through mining can be tax-free or more friendly for your income if you're announcing your income.
Certain tax benefits from mining where day trading wouldn't be an issue. And obviously, I mean, what I've seen, being in Georgia, is certain people who've come there in the past to take advantage of some of the lowest electricity rates in the world. Obviously, you want to have, I mean, if you're paying huge electricity rates, you're gonna be at a disadvantage. So, is there a crypto today that you can mine from your laptop?
I believe I talked about there's this one Grin. There are some really cool. I like it when I see crypto that is like designed to have like that kind of grassroots feel, where they make it as easy as possible for anyone to participate and to mine it. That's like just a great kind of reflection of their philosophy and kind of where that coin could go in the future, with people with that kind of passion behind it. You look for ASIC resistant mining algorithms. I believe Ethereum is trying to be ASIC resistant. Monero is always forking to avoid ASIC miners. They changed because ASIC miners are those computer chips, and the creators of those are constantly changing it to make it more efficient. And so these cryptos can kind of pivot around that. So look for ASIC resistant mining. Grin is one that has been trying to, keep that grassroots feel and be GPU, CPU mineable. I haven't gotten so much into mining, so I wish I could name more projects, but they do exist. And so that would be kind of the keywords that you would be looking for.
For someone who wants more of that control and maybe they can find some efficiencies, maybe they have some power efficiencies and they're just willing to go through that extra effort. Trading versus holding, day trading, you see, we've seen some of these guys, they're trading in and out, they make money no matter what. I mean, how do you view, once you have the coins, what do you do?
Personally, I choose to pretty much dollar cost average. So I set a budget and I buy consistently according to that. I might change that a little bit according to how the market is shifting, whether it be like a bull run or a bear market. But I don't know, day trading, there's so many scammy people saying, oh, follow my signals, you'll be profitable, guaranteed. Day traders lose money as much as they make money. They might make a little bit more than they lose, but it's just like inching, really. That's my opinion, obviously. If you're brand new to crypto and you're also like, you've never day traded stocks or Forex or anything, I would say paper trade for a very long time before you're getting comfortable with it. But again, like this market is so brand new that even like the old analytics of like Fibonacci scale and all these things, like you can't really, it's a big picture thing happening, and it's a brand new kind of market. And so I don't necessarily think that tried and true maybe analytics of stocks will apply to crypto as efficiently. So, I mean, also cryptocurrency is a 24-hour a day, 7-day a week market. So you have like the West market, and then you have like when the Asian markets wake up in the middle of the night. So you could trade your your day away. I just think it's awfully stressful, and holding has proven to be profitable for a vast amount of people, certainly in the long run. So the argument for holding there is, oh, it depends on when you got in. But, you know, again, I'm all about educating on why cryptocurrencies exist, why they'll prove to be important and valuable in the future. And that kind of helps you see your way through the valleys.
So you're dollar cost averaging in from fiat on a weekly or monthly basis?
Yeah.
Okay. And so, you know, what's interesting to me about that is, I mean, I do think there are times, as you're mentioning, where you just say, hey, the market's on sale, whatever that market is, you go in and you buy. Right now, you've got a lot of foreign currencies that have gotten beaten up. Some of them have recovered against the your base currency is the dollar. They have recovered against the US dollar. We've seen the Australian dollar come way back and others. But, you know, a lot of people, if you're saying, hey, I want to buy a house, for example, especially a house to live in, they would say, you know, just buy it and, you know, it'll work itself out eventually. You know, don't worry about getting the absolute best deal. You don't want to, you know, you want to make money on the buy at the time, but you don't want to be focused on, well, what if next month it's cheaper? Yeah. How do you approach that with crypto? Because I think so many people don't know where it's going to be in 10 years.
Exactly. And a lot of people make heartbreaking decisions when they're trying to time the market. Oh, they think it's going to pop here, so they wait until it goes higher and it doesn't. Or, you know, they think it's not going to go that low, and then it does. So I think just making an investment plan is solid advice, knowing kind of, you know, your goals, what you need, what you would like to make, and having realistic goals for that. Seeing once those goals have been met, don't let your greed take over and change your investment plan in the middle of it. I think that those are kind of like emotional decisions, and they don't always lend themselves to how it can go with your investment. Yeah, I mean, it's really heartbreaking. So that's why I just dollar cost average. And like I said, like you said, if it's going on sale, there's blood in the streets. You got to have kind of like a contrarian state of mind. You have to see it as like being on sale and not like, oh my gosh, my investment is burning, because it has time and again recovered from that. I think the amount of times Bitcoin has been called dead is like in the hundreds. So, yeah, I would say
that's the thing. If you're going to be doing crypto, I mean, it's the same thing with what we talk about. You know, it's funny. We went through the same people who are now saying you're an idiot to hold emerging currencies were the same ones saying you're an idiot to hold US dollars. I mean, you're always going to have people telling you that what you're doing is wrong. Anything like this where it's new, there's always going to be a naysayer. And I think you have to have a strong stomach, but you also have to have a plan. And here's the plan, and I'm going to follow it. And I'm not really deviating. As you said, maybe you take a buying opportunity occasionally, but I'm not, you know, because the average person says buy low, sell high, and the market's overheated, I'm going to wait. And then they don't actually do that. They actually just buy when they feel like they're missing out, and then they sell when they're panicky.
It is much easier said than done to to buy low, sell high. So yeah, I mean,
YouTube commenters telling you that's what you should do, and I wonder how many of them are actually doing it.
Yeah, usually they're saying that out of, you know, the experience that they failed doing that, and so lesson learned. But again, no one has a crystal ball. Nearly every Bitcoin prediction is wrong. So you just got to see kind of where the sentiment is going. The RSI index is interesting to see if it's been oversold or overbought. Stock to flow ratios are interesting. Just there's these little tools you can kind of see generally where the market might go, but you never know, really.
Yeah. So I think you have to have some core principles and some core beliefs in either of these, you know, in offshore, in Nomad Capitalist, or also in crypto. Because if you're just going by what the masses say, you're always going to be steered wrong, and you're always going to be convinced to stay home, you know, stay in the U.S., you invest in stocks and bonds, put your money in Chase Bank. It's always what it's going to be.
Yeah. And that's really like having like an early adopter kind of mindset, where you're not listening to what the masses are saying because they're mostly just repeating what they've been told by someone who has an agenda. So I think what that really requires is having good perspective, always searching out for information, and maybe it takes a little gut feeling and some bravery to kind of stand up against the flow, because we are social animals, and that's kind of counterintuitive to like, not be going with what the crowd is doing. But I certainly agree with you that when you follow the masses, you're not going to benefit from being ahead of that trend. That's where a lot of profit can be made, monetarily or anyway, really is just seeing what could be beneficial, and, what does it hurt to invest a little bit in something that could be very beneficial in the future?
So how are you actually buying though? I mean, because I know people say, oh, I was using this bank account or that bank account, or I put it on a credit card or whatever, and my bank doesn't like that. A lot of banks in the US and other Western countries don't like it. There are now some of these banks that they specialize in it. Oftentimes the entry point is very high, sometimes the 7 figures. How are you buying in, and what have you seen to avoid?
Yeah, I mean, I haven't had any personal confrontation with my Portuguese bank and my on-ramp, off-ramp that I use. So I certainly, like, there's been so many reports of people's banks just closing their accounts because of there's like some kind of an indication of a Bitcoin purchase. There are some banks that kind of see the light of that and see the benefit of facilitating that and those kind of customers. There's one in particular in Australia, surprisingly. I read that a few years ago, actually, but they might exist, and it's worth searching out. When it comes to buying with credit cards, I really wouldn't recommend that, especially if you're purchasing an amount that like you can't normally afford and you're thinking you're going to get a profit enough to pay off the credit card. That's just it's another kind of symptom of greed, and I don't think that's a wise choice.
Yeah, don't go into debt. Yeah, don't go into debt. And that's why, people in the crypto community, and I see it both ways, they were complaining that, certain credit cards, I think maybe Capital One, if I recall correctly, was one of them, where they said, no, you can't do that. And listen, I don't want a bunch of people charging back on me or not paying their credit card bills because the Bitcoin price dropped and they freaked out and just sold, and now they don't have any money. On the other hand, if you have money and you want to buy it, and you just say, hey, every Friday auto debit my card, $2,000 or something, you don't recommend that. You just say have it sucked out of the bank account.
I mean, if that's on you, if you can afford it or not.
Right.
So yeah, but also there's like, I like bought a little bit of Bitcoin when it was pretty cheap. And then outside of that, I really actually earned quite a bit through participating in a decentralized social media platform called Steemit. So like, that's also a way that you can kind of get around this bank scenario of earning cryptocurrencies. If you have a business, you can accept it as a form of payment, or you can participate in a number of ways to, earn crypto. But for like, especially like big investors, there's like the over-the-counter market, which is definitely, a lot more high end and for big purchases, but that exists. So yeah, if you're in the middle ground, then yeah, I mean, you're kind of dancing with it. I don't think there's like a specific, when you make a transfer from your bank, or from maybe you're cashing out your profits from crypto into your bank account, I don't think there's like a specific, well, they do list like the exchange that it's coming from, but so there's that. Yeah, I mean, that's another like kind of sad reality that you have to deal with. There's there used to be, or there's that website, that, oh crap, what was it? localbitcoin.com that
Right.
allowed, peer-to-peer. It's like, and that's when you get into the decentralized exchanges, which, if you're comfortable with wallets and storing your crypto, that is what's required for you to first participate in a decentralized exchange. And what those are is you're always in custody of your coins, and you're being met up with other people for a direct trade. And those aren't subject to regulations. And there's one actually that allows for a fiat on-ramp. It's called BISQ, bisq.com. It's decentralized. They don't want to know anything about you. They don't store any of your information. They don't ask you anything, not even your email to participate. It's an application run locally on your computer, which is also great. But the thing with decentralized exchanges is that the liquidity is low. And so if you're trying to make a very big purchase, that might not be there for yet. So
it spreads like the wild, wild west sometimes. I see in some of these local Bitcoin, especially if you're outside of, if you're in the places that maybe you or I are in, maybe Portugal's a bit better, but and I've seen in Tbilisi, Georgia, and other places they have like Bitcoin ATM. But if you're in some of these places that we're talking about at Nomad Capitalist, it's really the wild, wild west in terms of spreads.
Yeah. And that's it. It's like, what are you willing to pay for it? So it's kind of the free market figuring itself out there. And it's still like yet another indication of how new this space is. And as governments clamp down on regulations or heaven forbid, ban it altogether, it's going to push the market and the developers to incentivize them to build out platforms that facilitate more free trade like that. So,
is there an arbitrage opportunity there? Hey, I'm going to Paraguay anyway. I'm doing some of the stuff that we talk about and take your, and have you seen anybody doing that?
Oh, for sure. Arbitrage trading. Yeah, that's definitely a thing. Even on a small scale of just on like using stable coins, they can fluctuate 1 or 2 cents. You could do like set up a bot, but what you have to worry about there is the trading fees and balance that into your profits to see if you're actually making a profit versus what you're paying to make the trades. But yeah, of course there's arbitrage. If you buy it in one place and sell it to another, if someone's willing to buy it, then congratulations.
A lot of places where there's more activity and then other places where there's less. And I imagine, again, some of the places where we're talking about planting some flags could be places with less volume. Stable coins, talk to us about those, how that works. Obviously, there's different types of coins, some that are talked about more derogatively, and walk us through the different types of coins.
Sure. So stable coins can be achieved one of 2 ways, either through having one-to-one backing, like they have it in a vault of whatever currency they're pegged to, whether it be US dollar, euro, Canadian dollar, yen, whatever it may be. And it's a way to have liquidity in the crypto markets and also have that kind of relative safety of outside of the volatility. Interestingly, stable coins are also, especially like Tether, which is a USD based stable coin, has seen a lot of influx this past month. And I think it's due to like people just want to get exposure to the US dollar, and it's much easier for them to do that through Tether, which is really interesting. Tether isn't the only USD pegged stablecoin. There's like USDC, PAX, I think is one. There's like 5, but Tether is by far the most used. There's also stablecoins that achieve their stability through different algorithms and trying to like use the market cap of their secondary coin to try and like MakerDAO and their DAI coin is an example of that, but those are much less stable. They do fluctuate quite a bit. Those type of stable coins have not seen as much success in stability, ironically, as the pegged ones. But again, it's like stable coins are still, reliant on that fiat currency that they have in the bank, if it's in the bank, if it's been properly independently audited.
But that's the question people have, right? Has it?
Yeah, Tether has not had an independent audit. There's always been like a rumblings of one, but then they don't actually ever report anything. And it's always really like Tether has a lot of shady things going on with it, with its relationship with Bitfinex, its sister company. So, that's also a perfect example of how speculative this space still is, despite all that happening. People are still using it. So yeah.
I think it's interesting because the idea of the stable coin is obviously you're not getting away from the the lowering values of fiat currency, but you're allowing yourself to be able to use it in trade and locking in a value the same way I might convert money from, US dollars into Malaysian ringgit to buy a piece of real estate or something, and to do so in advance and lock in a certain exchange rate. That seems like it speaks to the fact that maybe some people do want that. They do trust fiat currency, but they like the being outside of the banking system. So it's really distrust more of banks and KYC and policies than it is the fiat itself.
Yeah. Certainly. And, I think people still trust the fiat system because it's still successful and, hyperinflation hasn't occurred. So that's kind of a symptom of some trust still in that system. Also, if you're distrusting banks and you want to get into stable coins, make sure where you're storing the stable coins is off of a centralized exchange. Otherwise, you're just participating in the same kind of thing. Centralized exchanges have a lot of similarities to big banks, even like investment banks. Like they have your coins, and a lot of times there's been some exchanges that have gone down where people, when you start hearing reports that people can't withdraw their coins, red flags all over the place. Get your coins out if you can, if you have anything on there, which I wouldn't recommend in the first place. But again, people who are day trading, like they have their coins on an exchange. That's just how it is. But because people can't withdraw their coins because the exchange is taking them and trading them either on taking your coins, putting it into an account that they created and trading against you with your coins, or onto other exchanges and taking advantage of different scenarios. There is one exchange based in Canada called Quadriga CX. If you guys are into some drama and some shrouded mystery, the CEO of this exchange mysteriously died. There's been some speculation on whether he really died or not. He was a sole owner of the cold storage for all of the coins being stored on that centralized exchange, and he disappeared. So and it turned out that he had several accounts in different exchanges and on his own exchange trying to make money and losing, and it was a big mess.
You got to be careful. What are the big trends that you see? It's hard to look forward long term in so many markets, this included. Let's say in the next 1 to 2 years, what do you see as the trends to watch?
Well, what we're seeing right now develop, and again, like the crypto space changes so fast, even like 1 to 2 years, who knows? Even looking back like 2 years ago, it's vastly different. But so right now, DeFi, and not DeFi, but DeFi is certainly growing, and that's basically just lending one way or another, whether you're using a platform to connect you to borrowers and you're lending out your crypto to them, or you're borrowing, or you're storing your coins on a like high yield in a savings account. Really what they're doing is you're depositing your coins and they're taking those and making loans, and then you get like 4 to 6% a year on that, but those also fluctuate wildly, so that's not a guarantee. But really what DeFi is, how that differs from like the traditional finance markets, is they're using smart contracts to do this, to match people up, maybe to act as a non-custodial, like it's a smart contract that you're depositing your coins into, not a centralized third party. But there's some concerns that I have with this, and that is, of course, custodianship. Despite this being like a new twist on traditional markets, it really doesn't get me that excited. I don't, but a lot of people, I understand, people want to make money, and a really easy way to do, or a really cool way to do that, is have your money work for you. And, that a lot of people choose lending for that. So I understand, but you'd be surprised how this DeFi is still based on like a centralized custodianship of them being custodians of your coins. So if you want to participate in something like this, like there's Celsius, there's Salt, those are some popular ones for lending, but make sure that you're depositing into a smart contract and not into their possession. And also, speaking of smart contracts, and this being a relatively new development in the crypto space. It's a lot of these are happening on the Ethereum blockchain because that ecosystem was designed to kind of facilitate this kind of growth and innovation and infrastructure. So we're seeing a lot of these interacting with Ethereum and their smart contracts. But unfortunately, what we're also seeing, within this DeFi and other applications of smart contracts on Ethereum is these smart contracts have bugs. They have loopholes that hackers can take advantage of and siphon off funds, whether it be from you or from the company. We've already seen a handful of hacks specifically with the DeFi space. So most recently, actually, the guy who DeForce, I think was the name of the platform, the hacker got something like $300,000 worth of Ethereum, or $300,000 worth of crypto. And he sent a message, and the information that he left in his message identified him, and he gave it all back. So lucked out there. But it's really, really new. As with this space, like I have to repeat over and over again, there's no guarantees, and it's one of the risks that you kind of assume as you participate in this cryptocurrency space. So, I mean,
Yeah, I mean, what's interesting about that is to my last point that I know we have talked about before is tax on crypto, regulations on crypto. Governments around the world, I mean, some of them, which I know you want to talk about, some crypto-friendly countries or tax-friendly countries, have said, okay, let's get on board with this. A lot of countries like the US have made it very difficult, and despite the fact that there's all this risk, they've treated it to where you're really at a disadvantage, both on a tax basis and a regulatory basis. Talk about some of that, good and bad.
Yeah. So there's, this phrase of like crypto-friendly countries, and that could really mean a number of things. Either they have really clear and concise regulations. So someone who wants to create a blockchain-based, crypto-based business, they know exactly what they're in for and what they would need to do. Some people consider a crypto-friendly country to be one that really hasn't taken a stance, at least not clearly negative stance on crypto. Like they haven't regulated it at all. And so technically it's tax-free because they don't have any framework for that. Or, the best case scenario would be the crypto tax-friendly countries, which are, they've announced publicly that they will not tax at least your capital gains tax in certain scenarios. So, I mean, with regulations, it's kind of ironic that these countries, whether they're threatened by it or not, trying to control it or regulate it, really what they want to do is they want to make money off of it too, by the costs associated with complying with the regulations, or, paying fines if you're against those regulations for whatever reason. So
control, I imagine. I mean, in the case of the Western countries, more about control and
for sure. But so there are some countries that, for those of you who might be interested, as of like September 2019, I read there's countries, again, specifically pertaining to capital gains tax. I actually have them written down right here. Let's see. Portugal, if profits are earned like through an individual, not through a company, those are tax-free. I'm not sure if there's like a limit for the amount, but the tax authority here has come out twice saying that they won't tax profits from an individual investment. Again, I don't know if there's like a timeline, like a long-term investment, like if you've been holding it for a year. Germany is tax-free if their profits are less than 600 euros. Also, if it's tax-free if the crypto, again, is like a long-term hold, if they've been holding it for at least 1 year and then they sell it, it's tax-free. Singapore is tax-free for individuals and long-term holders. And Belarus, they have announced that profits from mining, trading, ICOs, or like investment capital gains are tax-free until January 1st of 2023. So that might work. But
they built an ecosystem where, I mean, it's one of those places where on that news, suddenly it became a lot more expensive to set up some of your operations in Belarus.
Yeah. So, and it also, of course, I'm not a tax professional, and this might not be necessarily the most up-to-date information. And if you are a U.S. citizen, maybe you don't know it, but Yeah, they kind of trump all. So depending on, how long, consult a tax professional in your area. And if you're a U.S. citizen, also consult a U.S.
Yep,
tax
we've helped a lot of people
professional
figure this
before you make
out.
a
I mean,
decision.
it's never one size fits all. And you're right. I mean, you have to really be careful. Gibraltar's another one that I think has come up. Yeah, but the U.S. I mean, the challenge with the U.S. is sometimes people say, well, let me get a second passport. That alone doesn't just solve the problem. Maybe some exchange will allow you to register as that other citizen with an address overseas, that kind of thing. But from a tax point of view and from a regulatory point of view, I mean, it's why I've said if you're doing crypto, you should have a second citizenship, and preferably one where they don't really bother you. And I imagine, these smaller countries seem like they're less likely to bother you. They include the Caribbean citizenship by investment programs. Malta, Bermuda have been talked about. What do you hear about those? Because they've tried to trumpet themselves as crypto friendly.
Yeah, I'm not that familiar with Bermuda, actually. I'll have to look into that. But with Malta, was it in November, I went to Malta for a blockchain conference, and the finance minister was there speaking. So they were really trying to put up this front of being crypto friendly, not necessarily tax free, I don't think, but again, just like clear regulations. And I actually got into this interesting article kind of digging into the corruption of the Maltese government and having to do with the reporter and crypto. So I don't know if they've pivoted from that even since November, but yeah, so they're definitely marketing themselves as crypto friendly to try and boost economic growth in that way, which we were saying before, like these lesser well-off countries, they've been looking for an edge, and this new industry being borderless and available to be set up anywhere, it is certainly an opportunity for other countries to benefit from that and be kind of like a haven and facilitate that growth outside of countries who are quite frankly kind of spoiled, and they don't need that kind of innovation. So it could be interesting.
Malta is one of those countries that I feel like, I mean, their citizenship program works for some people, and we've done that for some people. Malta's one of those countries, it seems like they put out a lot of press releases saying how wonderful they are for low tax residents or for this or for that or great corporations, and it never quite lives up to the hype, from my opinion. I'm not saying I'm against it, because I do use different things with folks in Malta, whether it's corporations at times or citizenship, but I feel like it's one of those places where like everyone imagines it's this panacea. Anyway, so I mean, if you were an American, do you feel that being an American is a hindrance if you're going to be a serious crypto investor?
Absolutely. I mean, yeah, not only just with taxes, but with reporting, and not to mention the fact that centralized exchanges are either going to require an immense amount of very sensitive personal identifying information that you're going to have to trust that they store correctly, lest it gets hacked, which has happened, and people's information has been lost or sold to the highest bidder on the black market, or they just don't want to deal with the threat of the SEC or the US government at all, and they just cut out US customers, which Binance did actually, because for a long time you could get around these kind of limitations from the exchange by using like a VPN, but the second you log into your account and you're not on that VPN and you're registered as accessing from the US, you are locked out for good, which can, anyway, but so Binance has went ahead and divided. They've kicked all of the US customers off of their normal exchange, and they've created an exchange specifically for US customers, Binance.us. So that's kind of where you're going to be if you're a US citizen, like, especially if you're a day trader, wanting to do crypto and you're in the US. I mean, the best you can do is at least be in a crypto friendly state. And then, half of that situation can be a little bit alleviated, but you still have the federal government.
Or you like?
Wyoming is really interesting. Caitlin Long has been doing really, I think, interesting work, and, trying to make new legislation to kind of, it's really interesting. These governments are trying to fit, like, say, a round crypto peg into their square hole. Like, crypto, like, to limit it to already existing framework of how money can work is kind of disheartening. So it's kind of funny trying to see, like, you know, the CFTC thinks it's a commodity, the SEC thinks it's a security, and so everyone wants to get a piece of it. But so I think, yeah, Wyoming is good.
It's always, whether it's states, you know, provinces, regions, countries, whatever, it's always going to be these places that, I mean, for me in the U.S., I think Wyoming is great. You know, South Dakota's done some good things. I don't know if I'm going to live in these places. I'd rather just go overseas and live in and take my pick from the buffet of countries that are tolerant or just agnostic to it. But it's always those kind of places, which to me matches up with what we talk about here. It's always about those off the radar places that want that edge.
Exactly. And I think people who have that, either haven't had the chance to travel and they don't know what's out there, what they might like. I've been traveling pretty consistently for the past like 6 years now. So I've had my eyes open and I can't go back. But so it's, yeah. I agree. Like, I wouldn't want to live in Wyoming. No offense to those that do, but if that's where your life is like shifting towards, if that's your goal, why not upgrade where you're living as well? I mean, the cost of living is probably going to be cheaper. You know, better way of life. Like, there's a lot of upsides. I understand if you have family that you're tied to or other responsibilities, it might not be possible. But if you're in the chance that, you know, you can be that open.
It's always possible.
Yeah.
We all have good, you know, excuses we call reasons, I imagine.
Oh,
and just to end, I mean, you know, you hear from some of these, again, maybe the real crypto devotees that, you know, they'll say, well, I haven't bothered with taxes, just, you know, stored offline, don't worry about it. What are they going to do? I never believe this. Like, this is, to me, is the equivalent of these people who are going to, like, they're going to live in their ranch with their guns, and they're going to fend off the U.S. military. Like, yeah. we got to have a strong, I mean, you know, you can have the Second Amendment, but we're gonna fend off, like, you know, the Army, the U.S. Army's gonna come in, and you're gonna pick them off one by one. Like, first of all, why would you want to do that? Second of all, you're not going to. And there's such, I mean, and this is, for me, where I think what you've said is depoliticize this. That's kind of the underlying message that I've gotten is make it a financial decision, make it a hedge, make it an investment, rather than making it this movement. The more I get attached to movements, I feel it doesn't really benefit you in the long run, and you kind of get into this movement group thing of how you're gonna rip off the IRS and they're never gonna find you, and you're gonna live under the, like, why do you want to live in a place where they're so against you, and live in the shadows and pretend like you're smarter than everybody? Because, you know, if there's one thing I've seen from watching all these shows over the years, it's that, like, white collar criminals never see it coming. Like, just don't do it. Just go where you're treated best.
Exactly. And to be honest, you're just living in fear because, I mean, the IRS, who wants to really mess with that? Whether you agree with it or not, the fact is they have power. And
how do you agree? They love the IRS. Like,
that's your reality. If that's where you're choosing to live, or that's where you have to live.
At a certain point, I say, you know what, right? I mean, in today's world, it is not the Cold War. It is not, you know, the Middle Ages. I mean, if you get to choose where you've lived and you've chosen to live there, you know, you kind of have, you know, that signed the social contract a little bit. Like, you can attack me. I'm not a good libertarian, like the social contract. You know, if you choose to stay there when you have another option, like, you know, you're a little complicit.
Yeah, exactly. And yeah, so yeah.
Well, Heidi from Crypto Tips, how do we find you?
You can find me on YouTube, Crypto Tips. Also, I've been great at marketing, so my Twitter account is at blockchainchick, completely different name. Also, learningcrypto.com is a website I've been building to facilitate more educational content. And also, if you want to get a hold of seeing, you know, what I'm investing in and why, also get a chance to have free classes on things like crypto wallets was my first one. I'll also be going over like how to privatize or protect your privacy online generally and with cryptocurrencies. Also like how to spot a potentially profitable cryptocurrency, things like that. Go to patreon.com/cryptotips and join the CT Club. Excellent.
All right, Heidi, always enlightening and glad to see you. You've gone where you're treated best. Portugal, interesting place.
Yeah.
And so
Love
stay
it.
safe. Thank you for the tips.
Great. Thanks for having me again, Andrew. It was great.
How can Nomad Capitalist help you? 4 ways. Number 1, subscribe to our channel and click the notification bell to make sure you get our new video every day. Number 2, get a copy of Nomad Capitalist, the book. You'll learn a lot of my personal experiences over a dozen years of studying this stuff, as well as exactly some of the strategies that you can use to build your Nomad Capitalist plan. Number 3, if you're not sure where to start, but you want to come and learn from my team and I, you want to come and mingle with like-minded people, learn more about our live conference, Nomad Capitalist Live. It's coming up soon. And number 4, if you want some help right now because you've got a burning issue, you need something solved, you want to lower your taxes, get a second passport, or build the Nomad Capitalist lifestyle of your dreams, go to nomadcapitalist.com and click on Become a Client.